Welcome to the Charleston Real Estate Connection Podcast, connecting and reconnecting you with all things Charleston. I am your host, Nia Joy, your golden realtor, licensed in the state of South Carolina. Welcome to the show. Hello, everyone. It's me, Nia Joy, swinton-jenkins, real estate agent with Carolina One Real Estate. I am here with two amazing professionals in the industry of mortgages and in homeowners insurance. And I want to talk to you today about some of the frequently asked questions that buyers are having right now. My buyers are really wanting to know about interest rates and what's happening with that. And the purpose of us chatting here today is just to go over what you can expect when it comes to rates, why rates are the way they are, as well as the credit you can expect to have when you're purchasing a home, as well as the closing costs. And I have with us today Ashley Haas of Atlantic Coast Mortgage and Hilary Jacobsen of Total Quality Insurance. Thank you, ladies, for joining me today.
Thanks for having us.
Thank you. So I know when it comes to homeowners insurance, that is kind of a gray area because a lot of homeowners or soon to be homeowners don't have any idea about that. So Hilary is going to be going over the replacement costs versus the contract price costs when you purchase a home. And she'll also be going over the premiums and what you can expect as far as what's going to be tacked on to your mortgage payment. And a lot of people must understand that a mortgage payment does not only include the loan for the home, but it also includes taxes, maybe PMI or mortgage insurance, as well as homeowners insurance. So we're going to get into that right now. But first, let me introduce you again to Ashley Haas of Atlantic Coast Mortgage.
Hey, guys.
So Ashley, again, thank you for being with me today. I know the whole purpose of this talk is homebuyer frequently asked questions. So can you tell us a little bit about what we're seeing when it comes to rates and expected credit to have when you're purchasing a home, as well as these closing costs? What are those comprised of? And tell us a little bit about how buyers can be better prepared when they're purchasing a home.
Yeah. So obviously we've got a ton of buyers out there right now. We've got our first time home buyers. We've got people buying their second, third, fourth, fifth home. But it can be just as stressful for people buying their second home as the first time they bought. It may have been a while in between. So you can technically be treated like a first time home buyer multiple times, depending.
Yes, absolutely.
But the biggest question I get, and I get it almost every day, is interest rates. What are they? Why are they the way they are? Can I wait? Should I wait for them to go back down? And I think it's really, really important to understand where we came from versus where we are versus what happened in the middle. So most people are aware that at some point around 2020, rates dropped significantly down to 3% on average. And it held like that for about a year to a year and a half. And then rates returned. And that is the key point to remember. Rates did not go up, rates returned.
You heard that, everyone? Rates returned.
Returned.
This is not an unusual rate that we're seeing.
Right. So just like at a store, if there's a sale on an item and then you come back and that item is not on sale, the price did not go up, it returned. Rates historically were between 6 to 8% for the last almost 10 years, sometimes even higher at almost 10% for a while. So rates are hitting right around a 6.1 for national average right now, which is a great rate. It's a great rate. If it held at 6 for the next 5-10 years, it's a good sign that our economy is returning and holding steady. And that's really what we're looking for, is to see, are those rates going to hold steady? When you're looking of when should I buy and timing it, the other thing we remind everyone is that rate could change later on down the line if you choose for it to. It is a fixed rate, so it shouldn't, unless you're doing an adjustable rate, it shouldn't change. But if the rates do go back down for some reason, you can refinance.
Yes.
What you don't have control over, though, is how expensive the housing prices are going to continue to rise.
Absolutely.
The game can be really tough. So.
And right now, we're expecting about 5% rate. And so that the rate at which the homes are increasing, home buyers, you have to understand that every month you can generally expect an increase in the price of homes.
Yeah. Yeah, so I would definitely tell people do not wait just because of interest rates. Because again, you run the risk of not only them not coming down like you think they're going to, but also the pricing going up. So
Okay.
rates should definitely not dismay you. But if anyone ever has any questions, us lenders are always happy to explain why the rates are the way they are and where they've been. We got tons of data on it. So
Absolutely.
the things that I'm talking to people about are don't worry about rates because they are what they are. What we need to worry about is how qualified are you and where do we need to be to qualify.
Yes.
So biggest thing is credit. It's again, the
Credit.
conversations tend to be about interest rates. And I'm like, no, we're looking at a different number. We're concerned about a very different number, and it's your credit score.
Yes.
So lenders will need to look at your full credit history to know if you're able to qualify. Each loan program has its own minimum credit score that's required, and then lenders may have a different minimum score that they require for their own risk tolerance and for their investors. So a good example is FHA can technically go all the way down to a 550.
Uh-huh.
You're not going to find a lot of lenders, though, that are really lending out at that price range or credit range. I mean, typically 600 or above is our benchmark of average between lender to lender of what we're looking for credit wise. It's a good way to know that you are probably about ready, at least to start those conversations,
Yes.
and could be in qualifying range. Some loan programs, so like conventional, may require a 680 or above. But the good news is you don't have to have a 700 or a 750 credit score just to be able to buy, which we do hear that a lot.
Yes.
So the best thing, though, is to let the lender check your credit. Let us look at that credit history, see if there's anything you need to work on to get yourself ready, because it does help determine your interest rate availability as well. So
Absolutely.
credit's a big one, but we'll tell you when you're during that, qualification process, which loan products you could qualify for based on your credit. And then that leads into the third piece, which is the closing costs, because your loan program determines your closing costs because it determines your down payment 99% of the time. Now, there are times where you may be an FHA, for example, which only requires 3.5% down, but for debt to income reasons, we need you to put down 5% to make it work. But each loan program has its own minimum down payment, which can be, if you're VA or USDA, all the way down to 0 for a down payment. Or if you're FHA, that's always a minimum of 3.5% down. If you're conventional, that can be anywhere from 3 to 20% down, 3 to 5% if it's your primary residence, 10 to 20% if it's a second home or investment home.
Yes.
So we hear a lot of,
there's a difference. 20% is not required typically for first-time home buyers.
Definitely not. And we hear a lot of people think that I have to have 10 to 20% to be ready to buy. Or we also hear the opposite, where a lot of people think that you don't have to bring any money to buy a home.
Absolutely.
You will have closing costs. There's 99.9% of people will have to bring something to closing, regardless of how much of a seller credit you get.
Absolutely.
And that's a big piece of what I talk about, are what are closing costs. There's closing costs versus cash to close. Your closing costs are the things outside of your down payment. So that's lender fees, attorney fees, any money you put towards buying down your interest rate. If you're paying off debts at closing to be able to qualify. The attorney fees are a big chunk of it, a big old chunk of it, especially in South Carolina. And then you have your escrows, which are your taxes and insurance that are collected at closing. So those are your closing costs. If you receive a seller credit, it's applied to that. Your cash to close includes all of those and your down payment.
Absolutely. Well, and that attorney fee, I know that it's actually a base fee. Most attorneys charge about the same for any representation, but then you have title insurance, and a lot of people don't understand what that is, but that's a whole nother talk for another day. And then there's the taxes, correct?
Yeah. Your taxes, which are either collected for the remainder of the year or the beginning of the year, and then your cushion in there, and then your insurance is collected for the full year plus your cushion. So I have to remind people sometimes, because I do hear a lot of talk of, well, I'll get a seller credit and that'll cover everything. So your seller credit, again, can cover those closing costs, but it cannot cover all of your cash to close, because part of your cash to close is your down payment, and seller credits do not get applied to that. That's your stake in the process. That's what you're bringing to the table, truthfully. So unless you are doing something like USDA or VA, you will still be bringing your down payment as your closing costs. Or unless you're receiving a down payment assistance grant, which we do offer. So if you qualify for it. So those are your options. But for most people, we tell them your purchase price, you need to have around 3% of that in savings to know you're about ready to go. So, or you can get it as a gift from a wonderful family member.
Awesome. And that gift, that has to be from a family member?
Depends on the loan program. A lot of them require it to be an immediate family member. Some of them don't care who it comes from. We just
Okay.
have to be able to source it. It can't be a gift of
Source it.
cash. Yeah. Has
Sourcing
to
is
come in.
key. So you can get the
Yeah.
money from somebody, but it has to be a trail on where the money
Yeah.
came from.
Yeah, exactly. Yeah. Yeah.
Okay. So
Yeah.
you went over rates, explaining what the rates, why the rates are the way they are, credit scores. As you can see, there's a range for what some lenders are looking for, so keep that in mind. And then, of course, the closing costs. These are some of the things that you can't really avoid when purchasing a home, whether you're a first-time home buyer or you purchased before. And again, Ashley mentioned that you can be a first-time home buyer more than once. It's usually a window, correct?
Yeah. 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 It has to be at least 4 years in between
4 years.
first time you bought and when you sold. So yeah.
Okay. So, I mean, so that's something to think about and something to consider. And Ashley and Hilary, I know we're going to talk to Hilary next, but both of them, you have their contact information so that you can reach out to them. They are a resource. So this video isn't just for answering questions. We want to let you know that we are all guides to you and anyone you know looking to purchase a property, whether they're moving into the area um, um, or they currently live in the area. So thank you for that, Ashley.
Yeah.
So Hilary, this is the stuff that we don't talk about very often when it comes to buying a home. It's the sexy insurance, right? Right
Yeah.
now, this is a hot topic. You guys are actually in the news a little bit more lately than I guess in a while, and it's obviously because of the premiums.
Yeah.
So Hilary, tell us a little bit about what's going on with these current homeowners insurance rates.
Yeah, so
Premiums.
it's been a crazy time in insurance for the last like 8 months. We've been seeing increases that we've, I mean, I've never seen before. Maybe way back in like 2008, but that was before my insurance career. But yeah, we've been seeing increases. They've doubled. I've seen some go from 2,000 a year to 4,000 a year. Luckily, because I am independent, I can shop it around.
Mhm.
So we don't just have to take off coverage and stuff. We have different options.
Okay.
Sometimes we can find something cheaper, sometimes we just can't. But part of the main reason for that, though, is just inflation. Unfortunately, insurance is not immune to that.
Mhm.
Insurance companies have lost a lot of money in the past year to 2 years just because of the cost to replace homes now compared to what it was before COVID hit. So they have to make up for that. And because we're on the coast, no matter if you're in Somerville, Moncks Corner, you're
Mhm.
still considered coastal.
So
So
consider coastal.
it's not the same as like North Augusta or Columbia. It's a lot different. But yeah, a lot of that has to do with just the replacement cost, the wood, and stuff like that. I typically like to do, now I always add on to policies an additional 25% of dwelling endorsement,
Okay.
just because we've seen how much the increase of wood and all building supplies really. So just to have that as a buffer, each year it's pretty guaranteed that your premium is going to increase a little bit,
Mhm.
just because you have an inflation guard in that built into that policy. It's
Okay.
like 2%, but obviously the inflation is way over 2% right now in the past year.
So are you saying that you can get quoted, for example, let's say your homeowner's insurance is 2,400 per year. Are you
Mhm.
saying that it's possible the next year when it's time to renew your policy, it can go up?
Yeah, yeah, and it's very common for that to happen.
Okay.
And whether it's like $30, $20, or sometimes it does stay the same. But it is very common for it to increase, especially from your first year into your second year.
Yes.
And the reason is because you get like new purchase discounts and advanced discount. You get a lot of extra discounts because you're first purchasing the home.
That is very common. I actually
Yeah,
get a lot of calls from my clients and they go, Nia, my mortgage is higher now. And then I have to go into escrow and what that is and
yeah,
what that's about. And also I touch on, well, did you see your insurance bill? Did that change at all? Have you filed any claims? I just kind of just ask them, like maybe
yeah,
they need to get in touch with their insurance agent. I ask more
yeah.
questions.
And that's a huge thing as well, the escrow. Escrow, it gets a little confusing, and So when you have a deficit, so you're paying into essentially a bank account every month with your mortgage, and then they pay that once a year. If
Okay.
there's a deficit in that account for the next year, they're going to obviously want that money back. Plus,
Right.
they need to increase what you're putting in. So say it goes up 300, they're going to now want 600 for the following year. So yeah, it looks like it went up a lot. It went up $600, but in reality, it only went up 300. And sometimes when you call them, it doesn't. The escrow company, like they just explain it. Oh, it just went up $600. They don't actually break it down. So it's nice to have a local agent who can break it down for you and talk to you about what's really happening. Yeah, and I tell them, if because the renewals come out at least 45 days in advance. So if you know that there's an increase, you can start putting some more money into your escrow account to like help soften the blow of having that increased mortgage payment.
Yes.
So that definitely helps.
I actually just had a client I was talking to yesterday, and she said that she was aware ahead of time that her escrow was going to be different in January.
Mhm.
And so she just went ahead and paid the difference because she didn't want her
Yes.
mortgage payment to change.
Yes, it's very smart to do that. That way it avoids all the extra, because if you have the money now, you might as well do it just in case. Because you may not have that in the future. You may have a short month, whatever the case may be. And then if your insurance or your mortgage payment goes up $500 or a couple $100, you're gonna be like, oh no. So
Smart. So when it comes to replacement costs versus the actual price of the home, I know a lot of times buyers will see when they get that quote from you, they'll go, "Oh my gosh, but I paid, 500,000 for this house, and you're only going to cover a rebuild cost or replacement cost of this much." Like, what's going on with that?
So that is probably, if I had $1 for every time someone asked me that, I could probably retire and buy an island now.
Take me with you.
Yeah.
Yes.
So I could leave the insurance industry altogether. No, but obviously it's scary if you're not in the industry and you don't know. You're like, oh, I bought this. That means it's going to cost that much to replace it. It's not true at all. You're buying the land. You're buying to live in Charleston. So you're not going to see that as much, maybe, especially when people move from different states. They're like, well, it matched what I paid for the house or whatnot. I'm like, well, you're also in Charleston where everyone and their mother wants to live.
Yeah.
So that land is very expensive. So you're paying for the land as well. So when you're getting your insurance, the insurance company is only going to pay. I mean, you don't need insurance for the land. You just need it for the structure itself. So we have what's called a replacement cost estimator tool, and we put in all the different things, how many bathrooms, the type of siding, the type of foundation, type of roof, what style the roof is. So it's really nice for us. I mean, we can look it up on Zillow of the listing, but as like a listing agents and stuff, it's really nice to have like what type of when the roof was replaced, stuff like that. That kind of helps with like cost as well. Not trying to mend the two together, but having all those details is really nice. We usually can, like I said, pull it up right on Zillow. And that's how we get that replacement cost estimator. And like I said, I always add that additional 25% of dwelling endorsement just to have that as a buffer now, just in case. But I definitely recommend people who bought in like 2019, I mean, anything before 2020 and they haven't really looked at their insurance, I highly recommend to just have an agent take a look at it and see where your replacement cost is. Because whether, I've seen a lot and I've looked at some that I haven't been able to save them money, but I'm like, you're severely underinsured. And I'd rather be paying an extra $500-600 a year and have an extra $150,000 in dwelling coverage than to not have that, and you have a fire and you don't have enough insurance. So
yeah, absolutely, because you definitely don't feel it until you need it.
Exactly. And I always explain that to people, especially right now, because obviously people are upset that their premiums are going up, and I'm like, I understand. I was like, if I wasn't in this industry, I'd probably feel the same way, because it's not something tangible you use every day. It's not gas, it's not groceries. It's a what if thing. And so paying for it sucks. I mean, it does suck. I will agree. Every month you have to pay those premiums, and it's not fun.
It's not.
But in the event that you do need it, you're going to be so thankful that you do. So
Absolutely. And age on the home, I just wanted to add too, I think matters.
yes,
We have an older home and the insurance is much more high. It's much more high
yes,
than a newer home. And I'm like, why is it costing? And can you go and explain that? I know that
yeah,
wasn't on our list of questions, but can you go
yeah.
and explain
No,
why maybe an older home that may be in great condition, have upgrades and everything, why an older home may be a little bit more to insure?
that's a great question. So the older the home, the more the risk of things going wrong, pipes bursting, something like that. However, there are companies that if you redo the home from like down to the studs, they will use the replacement cost that you the year replaced as the year that you redid the home. So if you completely gutted that house and redid it down to the studs, and say it was in 2015 but your home was built in 1980, we can use the replacement cost year of 2015. Now all companies don't do that.
Gotcha.
There are select companies that do. That is also another benefit of working with an independent agent, because I have companies that can do that and some that don't. So I was able to do that recently for a client. His premium went up $1,000, and we found a new company that offered that, and we saved him like $700 a year compared to that renewal premium. So that is a huge thing. The age of the roof, like as listing agents, if you can find out the year of the roof, always put it in the listing, because it helps insurance agents out, because it helps their premium. So it's going to help the buyer. The newer the roof, the better the premium.
Okay.
Yeah.
Well, I think that's some really helpful information that I can pass on. I know we'll all be sharing this information on our social media contacts. And again, I'll have both Ashley and Hilary's contact information in the description. The other thing I wanted to mention to those of you watching is Ashley and Hilary have a third Thursday. They meet every month, every third Thursday. It's right
Every
there.
third Thursday.
Till the end
And
of
so if you're wondering when, it's every third Thursday. And they meet at a couple different locations. Would you ladies like to talk a little bit more about that and what the purpose of that is?
Yeah, so Third Thursdays is an open networking group that Hilary and I started. Anyone can come, whether you're a business owner or just someone looking to connect with other professionals in your area. We're there every month, obviously. Yep. So if someone's looking to buy a home and just wants to randomly corner a lender and an insurance agent, we're there.
Yeah.
So we host it in Park Circle. So usually it's going to be either Holy City or Tattooed Moose, depending on the season, when we're seeing it outdoors or indoors. We do have a Facebook page as well that I can link once this is posted below, that you can follow along and see where we're going to be. But anyone who wants to come out, we're always happy to have people come by.
Yeah.
Yeah, you can't beat that. And I think, I would like to challenge those of you who are business owners or just somebody who may be just thinking about purchasing, or maybe you own a home already. It's fine. I think it's a good time to start getting out a little bit more. You're no longer bound by restrictions that we were under for so long. So take the time out to get to know some people. From my understanding, it rotates every month. You may not see the same person every month there with Hilary and Ashley. So take advantage of coming out and enjoying some time. And my office is in Park Circle, and I can tell you right now, that place is so amazing to hang out with after work. And definitely a great venue, or great couple of venues that you guys have selected. So thank you for that.
Awesome.
Well, thank you, ladies, so much.
Thank you for having us.
I appreciate your time, and I look forward to continuing to have these talks with you. And again, if you guys have any questions, reach out to us and we'd be happy to help.
Thank you.
Thank you. Have a good day.
You too.
Thanks. This has been another episode of the Charleston Real Estate Connection podcast. Download all of our previous episodes on our website at charlestonreconnection.com. That's charlestonreconnection.com. You can also find us where all major podcasts are being played. Download us today.